we are going to go over right now to ord-oracle.com. Now, we are joined every Tuesday and Thursday on the Tom O'Brien Show by Tim Ord of the Ord Oracle. You can check out his website. That is ord-oracle.com, and check out his newsletter. Check out his book that he has. And then additionally, you go over to TFNN.com. In the services tab, we have 2 fantastic webinars from Tim Ord. That is the secret science of market tops. And I've been saying there's been a lot of toppy behavior in this market. Is it true? Well, I would recommend checking out this webinar and seeing for yourself. Additionally, we have 6 secret ratios every trader should know, which I think are fantastic. This is the crux of how Tim Ord looks at some stuff. Tim, how are you doing?
Good. So I sold my long position yesterday. I wish I waited another day.
Yeah.
Things are getting a little, tops take longer to form, and they're a little bit harder to catch. Bottoms are usually, they're gone in a heartbeat.
Sure.
Because everything tries to get to the exit door at the same time. That's your key to get long. But tops sometimes can take several weeks to form, and I think that's what's going on here. But yeah, we did sell our long position yesterday, made a modest profit. But first chart we're going to go over is the ARMS index. Matter of fact, we're going to look at several different ARMS type things. But anyhow, the bottom window is the 3-day ARMS. Next window up is the 2-day ARMS. Next window up is the 5-day ARMS. And the top window is the 10-day ARMS. 10-day ARMS is obviously the most important. It takes 2 weeks of data and really is kind of a key indicator to determine really highs and lows. And it never did get to the bullish area of 1.2 on this last low. I did get along anyway, just because I had some other indicators saying so. But what's happening now, if you go back down to the bottom window, you got 3-day ARMS right now, 0.85. You like to see it up around 1.2. So the 3-day ARMS is not near bullish levels. Next one's a 2-day ARMS, kind of a similar reading, coming in 0.82. And the next higher window is a 5-day ARMS, is 0.87. And the top one's 1.1. That's not too bad, but you got awful low readings on the ARMS index of those 4 moving averages. It's not like flashing the sell signal here or anything, but it does suggest that the rally won't go far. You really want to see actually the ARMS stay high as the market goes forward. And I listed the 10-day ARMS noted in pink areas, shaded areas, where it got to 1.2 or higher. And you can see most of the times it came at bottoms, worthwhile bottoms, even sometimes back in 2024, early January 24, market was rallying and the ARMS was going up same time. That's the most bullish combination you could have. Here we kind of have at best middling, so nothing real shattering. Then we showed this chart before. Go to chart 2.
Yep. And
this is a 100-day ARMS. Let me pull up something here real quick. Yeah, this is a 100-day ARMS. That's the bottom window, and the top window is actually the NYSE. But anyhow, the 100-day ARMS, it gets around 1.1 or lower, and I mark those times with vertical lines, some blue, some red. But every time it got down there 8 times going back to 2010. So it's pretty rare. It happens about once every 2 years. And of those 8 times it got down to 1.0 or lower, 6 of those times were at major highs. And we had that coming in basically late. It's actually still below 1 right now. It's 0.99. So it's been staying low for the last, it got below 0.1, I think, back in December. Market went down a little bit, came right back up. And we're still below 1. So the 2, the 3, the 5, and the 10-day trend at best is middling. And you got the 100-day trend, which is outright bearish. So the market's kind of adjusting here, even though we're up today about a point, or up 1%.
Yeah.
If you look at, we'll go through the charts here first. And this is another chart, the 3-day, or it's not the 3-day, but next chart, number 3, is the SPY VIX ratio. and that's also flashing a bearish sign where the S&P's made higher highs. If you notice, if you look over to the right window there, kind of blew up the where we currently are. And in January, we closed actually at a new high, and we actually hit a new high, and the VIX made a lower high. Can we go up and test the January high? That's a possibility, may or may not happen. But anyhow, if the SPX VIX ratio makes a higher high along with the S&Ps, that's usually a bullish confirmation that the markets are going to go higher. And we're not having that. We're not having that right now, as the S&Ps are basically setting at right now, actually on a closing basis at a new high, and the SPX ratio is not even near a new high. And I noted previous times when the S&Ps made higher highs and that ratio made lower highs, and all of them came at significant tops. So this is another reason to kind of worry, not to chase the market, I guess you might say. So this is another divergence, not ideal.
Yep.
Now, if you look on the short-term basis here, chart number 4, the second window up from the bottom is the VIX. And the VIX has been extremely narrow over the last about a month or close to a month, at least several weeks, or at least a couple of weeks here at least. And I point to the time in mid-December where the same thing happened. You had really kind of narrow range VIX, kind of similar to what we're having now. If you notice, the Bollinger Bands are squeezing together. When the Bollinger Bands squeeze together, it implies the volatility is going to increase on the VIX. Well, the only way the volatility will increase on the VIX, that happens usually when the VIX goes up. Well, the VIX goes up, that means the market goes down. Anyhow, something to watch. We're heading to it.
Some foreboding indicators here. Tim, please stay right there. Folks, we'll be right back with Tim Ord right after this break. Welcome back, everybody. I'm joined right now by Tim Ord of the Ord Oracle. Of course, this is Jacob Shoup, and you're watching the Tom O'Brien Show. So, Tim, kind of to summarize some of the charts, at least with the broad market, definitely nothing extremely bullish, definitely nothing bullish at all. Maybe somewhat bearish you're kind of looking at with it?
Yeah, actually, we're actually, if you can identify the January 31st high, which is on this chart, that would be kind of we had a bearish engulfing pattern about a week ago. Yeah. A week before that, we had another bearish engulfing pattern, which is basically January 31st. And anyhow, if you go back to January 31st and compare that volume where you are right now, because we're almost touching that high. And if you touch that high on 10% lighter volume, that implies that previous high will be resistance. And we got volume on that January 31st high of around 95 million. And we're coming in about 25 million, 26 million. True, we got about a half hour to go in the market, but there's no way we're probably going to accumulate another 70 million shares between now and the close. So I thought that might happen. I thought we might touch those previous highs, and here we are we're actually in the process attempting to do it right now. But I'm thinking probably today's going to be a high day. The trend's not ideal here. We're coming in, looks like about 1.35. That actually leans a little bit bullish, but we'll see what tomorrow brings. But we're probably making a high in this vicinity. That's how I'm thinking. That's the reason why I kind of over earlier in the week, I thought at minimum we'll rally to new highs, and we're probably going to do that. But these new highs are probably going to be some sort of a high or some sort of a top. I don't have the confirmation yet to actually sell it. Say it's going to be a sell signal. I'll have to wait to do my analysis tonight. But and on the bigger time frame, it leans bearish. On the short-term time frames, it's okay so far. So, but I still think that if you can't break a previous high and higher volume, which is what's going to happen today, then that's usually the first sign of a bearish setup.
I see.
So I'll put it that way. So
okay.
Okay, let's move on to the gold market, see where that is.
Absolutely.
Chart number 5, kind of keep showing this chart. You got to keep reminding people that the bigger trend is up, long as this monthly chart remains on a buy signal, which is the bottom window is a monthly cumulative up-down volume. Next window higher is a cumulative advanced decline. And I put a Bollinger Band on it. As long as those two indicators stay above the mid-Bollinger Band, the uptrend's intact. You can have a multi-week consolidation when that happens, even sometimes longer. But in general, this market's going to keep making higher highs over the longer term. Signals of this type on this monthly chart are anywhere from a year and a half to 3 or 4 years. I forgot what it was. So at a minimum, if it's just minimum of a year and a half, that takes this bicycle into November of this year at a minimum. But it could go, another couple of years after. I'm thinking this is probably going to be a couple of years after. So I think this will be a multi-year rally. Kind of look at the shorter-term trend. That's the bigger trend, which is the monthly chart. Second, number 6 chart is the it's a shorter-term chart. It's a pretty simple method. If the bottom window is a daily GDX, next window up is the daily cumulative advanced decline. Next window up is the cumulative up-down volume, and the top window is just the GDX. And I got a Bollinger Band on them. And when you run into the upper Bollinger Band or the lower Bollinger Band, normally the market at least hesitates on a short-term basis, and you need 3 out of the 4 to hit the upper Bollinger Band or the lower Bollinger Band. We got all 4 indicators hitting the upper Bollinger Band. A lot of times that stalls the market.
I see.
So on a short-term basis, we had a heck of a run. We went from basically 34 to 43, I think it was, on GDX. So consolidation's due. The market's just not going to keep going straight up. I wish it would, but it won't. But we're kind of due for consolidation. And you look on chart number 7. This is kind of another chart. I use it for buy and sell signals. And it's the RSI of the inflation-deflation ratio, which is the second window down from the top. The top window is the RSI for that inflation-deflation ratio. And you get up around 70 on this ratio, which we have. A lot of times the market will stall. And so I'm thinking you got 2 different indicators that are totally unrelated, kind of saying the same thing. So it tells me we're probably going to head into a consolidation here. Nothing real significant. If you look on the bottom window, which is the GDX, it's just a daily GDX, we jumped above a previous high, and that's that red line, a dotted line going across the chart there. Over the recent past, I did the same thing with the XAU, the next window higher. A lot of times you jump above some previous highs and you come back down to them. So on GDX, it'd be around eyeballing, it looks like about 38. Mm-hmm. On the XAU, it looks like about 160. So we may consolidate down to the previous highs. Nothing real significant. It's a consolidation and an uptrend. But we're due for some sort of a consolidation here. So consolidation is actually build power for the next rally up. So longer the consolidation, normally longer the rally. So nothing significant. If you look at chart number, chart number 8, it kind of this is a different method, but you can see it a little bit better where it comes in. I think we could pull back to, looks like about 39 actually, instead of 38. We're at 42. We could possibly pull back there. We got resistance up around 44, which is previous high. You got both indicators. The bottom window is the 18-day average up-down volume, and the next window higher is the 18-day average of the advanced decline. As long as those 2 indicators stay above -10, the uptrend's intact. And so both those indicators may actually stay above -10, and we pull back to 39. Don't know, but the market internals are real healthy. You got a really up-down volume, really in a strong position, and you got advanced decline in a real strong position. So nothing of a top of any consequence, but a multi-week I think is possible here. So, but buy the pullback, that's how I'd say it. And if you're long, you're probably getting long in the tooth. I thought we might go up to 44 and hesitate up there before we pull back, but to pull back here, but nothing significant.
Yeah, and you had that 44.22, I think, high from October. We're looking forward, of course, to you have Agnico Eagle reporting. This is some good stuff, Tim. Tim, thank you so much. Always good having you on. We'll see you Tuesday, okay?
All right. See you again. Thank you for having me on.
Absolutely. Thanks for coming on, Tim. Folks, you said it there right. We'll be right back. Make sure you check out ord-oracle.com to see more from Tim. We'll be right back.